Good morning, trade pros. Sound check 1 2. Quick little adjustment here. This might be a bit too close. Yeah, it's kind of close. Get away a little bit. You're right in my face, man. I'm kidding. Good morning to everybody. Hopefully you guys are having yourself a wonderful start to the day. There's a lot of action here in the market so far, so let's get into it. It is Tuesday. Just a reminder, tomorrow the markets are regular timing, regular hours. Thursday the market is closed all day, and then Friday closes at 1 p.m. Eastern. So we are getting some closures coming down. It's a very holiday shortened week, and there's a lot of people off this week. I see it when I go to the hockey rinks, and it's packed when it's usually just me and like 5 other people. All right, so the market tone this morning is a slight risk-off stance. Futures are kind of flat. We have seen some upside. Let me just turn around. We haven't really seen some upside. Futures flat all across the board. We did see some upside movement overnight, but it's all been erased. Kind of flat at the moment. NVDA is the kind of the reason for it. NVDA is down 4.4%. The stock is getting crushed. I'll tell you why in a second. Dollar index is softer. Bitcoin's up 1.5%. Ethereum up 3%. And oil is slightly lower as well in today's session. And gold is flat. So we had 2 really big news reports this morning. And these are news reports that aren't coming out in this usual time slot, but they are out because they were delayed due to the longest government shutdown in history, which has since concluded. I got a cough. Oh. Okay, that's much better. Pardon me. I don't know how to mute this. There's no mute switch, but I had to cough in your face. Luckily, there's no germs. We're online, guys. You're safe. All right. We had these reports coming out, and they were due to the government shutdown, they were delayed, and now we're catching up on the backlog of data. Some data is going to be not possible to catch up on because the data is missing the source. All right, but others we can. And these 2 things are PPI and retail sales this morning. PPI is Producer Price Index, and it is the pricing affecting the production side of goods and services and products, mostly goods. And it's an inflationary hint. And that's the important part, is we look to it for clues of inflation. Well, that report was expected to come out at 0.3% on the U.S. PPI final demand. It came out at 3.3%. The year-over-year number was, the annualized number rather, was 2.7%. If you removed food and energy costs, then it was 0.1% versus 0.2% expected, and that was that report. So, look, the good news for the PPI is that despite the fact it was delayed and some of the data was missing, it was kind of in line with expectations. And if you could make an expectation as an economist, as somebody whose job it is to make an expectation, despite the fact there's missing data, that just means that it was trending in the same direction as it was before the government shut down. There's no new information. The information is the same, just on the fact that somebody could make an expectation that was accurate on missing data, right? Because if you make an expectation, it hits the expectation. The data that was missing was assumed to be the same as the data as if it wasn't missing. So going to the next thing is retail sales. And this is arguably the bigger report. They're both listed as high impact, but retail sales is big. Why? Mainly because we're heading into the retail sales season. 'Tis the season to spend money. Friday's Black Friday. You're seeing somewhere here 30%. Where is it here? 30%. Get 30% now. 30% off. Everyone loves 30% off. Get it. Head on over to TradeProAcademy.com. But yeah, it's a holiday season, and retail sales is important. Well, here's how they came out. So retail sales came out softer than expected, and of course, they're not updated on the screenshot I took. But they came out at 0.1 versus 0.3, so a little bit softer than the expectation. This is for the month of September, by the way. These are all September releases, so was the PPI. So in September, retail sales were softer. That's not shocking to me. September is kind of a month where you go back to school and you're kind of focusing on readjusting your life back with the kids out of summer, going back to school, you're going back to work, adjusting your schedules. You're probably not spending as much money, and you're also starting to save for Halloween, Black Friday, and then Christmas. So it's not a shock. So that was the 2 reports this morning. Market assimilated, and it looks like they're already priced in. Okay, next thing on the news, NVIDIA is down 4.4% pre-market. This is really big, and reports are saying that Meta or Facebook's parent company, Meta, may spend billions of dollars on the Google AI chips called TGUs instead of GPUs instead of NVIDIA. So, considering NVIDIA is the AI darling of chips, and they're the big something in town, and it's swinging, well, that's lost future revenue. And the thing with them is the growth that's been kind of baked into NVIDIA. Everything has to go right, and all surprises have to be even better for the stock to keep performing at this trajectory, right? So the fact that Meta is going to spend billions with Google is kind of a disappointment for NVIDIA. Google started their TGU chip in 2013. I think this is fascinating. When it realized that if every Android user used voice search for just 3 minutes a day, it would double their computing needs. So Google said, we got to rethink the logic of a CPU, of a processing unit for the computer, the CPU and the GPU, and we got to rethink how it's structurally different. And they came up with their TGU unit. It's even got a new name. So it's very interesting. But the fact is that now NVIDIA is dragging down the NQ a little bit lower. So watch for today's markets. If you're trading futures, watch the NASDAQ and also watch NVIDIA, because NVIDIA is going to be a leader to NASDAQ, and NASDAQ may be a leader to the overall S&P 500. But there's some volatility there. So you kind of have no choice but to anchor your boat to NVIDIA and watch it as a correlatory market. It's going to give you very, very, very important cues as to the trading direction for you. Even if you're trading crypto, I don't care. If you're trading FX, NVIDIA becomes a correlatory market because it's down so much and it's diverged. So the way it converges again with price is going to be important. Will the market come down to it, or will it climb up to the market? I mean, it's 7% of the S&P 500 and 14% of NASDAQ. So kind of important. China. All right, now moving on to the Fed. No, I'm just kidding. Funny coverage of China. Treasury Secretary Besant, I always mess up his name, says China's on schedule with soybean purchases. This is really important. I thought I'd mention as an update because it shows the relationship is moving along positively and how it's supposed to. And, Besant also says China will always be natural rivals to the U.S., but relationship is currently stable. Trump may attend this APEC summit, and he said there could be up to 4 Trump G meetings in 2026, which is huge. So things are good, non-escalatory good. On the Fed, on the Fed, he also said, by the way, this is Secretary Besant, he said that they're on the second round of interviews for Fed chair candidates today. Donald Trump's interviewing today. And there's 5 strong candidates under consideration, and there will be an announcement for the next Fed chair before Christmas. This is huge because that person is probably going to cut and start stimulating like out of this world, like throwing money at it. Helicopter money. You might start getting hit in the head by racks of $100 bills as you're walking down the street. But they are going to push a lot of stimulus in the economy and cut rates. And I think that's probably a promise you're going to have to make to Donald Trump going into this role, because this is what he wants. Despite the fact that they should be 2 separate and privately, or 2 separate run organizations that shouldn't be influenced by the presidential office, should be influenced by economy, and their 2 mandates for employment and inflation. Let's be real here, guys. How this stuff works. You're not 12 years old anymore. All right, Santa Claus doesn't exist. Well, you don't believe in Santa at 12. I did. I still believe in Santa. Yeah. That's it. On the Fed, one more thing I want to tell you. Let's backtrack a little bit more as well. Jerome Powell's term expires in April, end of March, beginning of April, I think. And lastly, the Fed is moving more dovish. 2 last speakers of the last 2 days are both voters have been talking a very dovish game. They are doves, so it's not a surprise. But it is the rate cut odds for December are moving up again, which is good. All right, for the market. Now let's turn around and let's do this trading plan setup and all the other fun stuff comes along with it. Call walls, put walls, Paul walls. We got a lot to cover. Good morning, Polly, Marco, King Kong, Jackie. Good morning, Jackie and Marco. Wah, Santa's not real. Marco, listen, bro, it's real, okay? I just had to say that to appease the people. But you and I both know there's actually a fat man that drops by in the chimney, eats our cookies and milk that we leave for him, and gives us presents. And he gets to all like 7 billion people in one night time. All right. Yeah. We're all on the same page, Marco. Okay, so I don't understand why this happens, but my shortcut keys are different for YouTube live than when I'm in the trading room, and it really throws me off. I don't know why that is. Okay, so here's where we're at. First of all, the call wall today is around 45 and the 60. That's why I have these two levels up here as resistance. And the put wall is 6,600. That's down here. That's going to be your support. So, you know, the market is going to have a tendency to want to stay in this range here. According to the put and call wall theory and options max pain. It's good to know where the prices are, and we're close to the resistance. Okay, that's why you see these red and green things. Second thing I want to get through is building the trading plan for today. So, look, if you go on a longer term time frame, and the way that my charts are set up here, by the way, is left to right. Right? Left, higher periodicity, right, lower. So as you're moving your eyes, there's less. If you saw this as time, all right, this is weekly chart. This is the equivalent to 60 minutes, but it's 48 range bar chart. This is 24, and this is 24. Okay, and then, oh, you can't see that. 24, it's 16, and then I have the DOM, the ladder, the price ladder level 2, where I actually execute. So you're kind of scanning left to right the way you're reading. You know, thousands of years we read this way. You scan left to right, and then right is where you execute. So as you can see on the left side, we do have some good upside here that we've come off of the lows. We've rallied upward 67.50 to around 6,800. I'd say like 67.80. The middle of all that is going to be some pretty big resistance here. This cluster that we're seeing at the moment that we're kind of going into, it's a very wide area. It's impossible for anyone to tell you down to the point to like this is where this rally is going to stop. And it's not like the rally will stop, but as you keep going up, it's going to be harder to keep going up. You're going to have to attract more buyers. Coming in and rallying off of the lows, the first buyers are short sellers who are stuck and buying into the price. They're buying out of their position, right? But as the buying out of your position ceases and you start to move price up, you're enticing new shorts to get into the market, all right? And so the first step is shorts buying. This is how the rally starts. If you guys don't know this, pay attention. This is going to blow your mind. You'll never look at a chart the same way again. Coming up off of the lows, you got short sellers that are stuck, that are buying in or getting stopped out of their short positions, and they're the first buyers. As you increase price, the next objective to overcome is new shorts. So now you have to have at this level an absence of new shorts because they're the ones that dunk the price lower and form the higher low. You know, the low price isn't appeasing, but the price goes higher, it gets a little more appeasing to sell, and you sell it. So in order to flip bullish and to break a prior high, the shorts have to start buying at the top. You have to start losing potential new shorts towards the middle of the range. And then as you approach the top, you have to find enough buyers to sustain the price, push it through the resistance. And at the very top, you're going to have to overcome the wave of selling. You're going to get hit with a wave of selling that was here and here and here. There is no breakout that's clean. The breakout by definition is unclean. The breakout is war. The breakout is carnage. The breakout is blood on the floor and one person wins and steps over bodies to advance. That's a breakout. So there isn't a clean breakout. The breakout is a fight. So there's going to be a wave of selling that's going to try to hit it at these 67, 70s, 6,800 even, I would say the top side. But if we could advance through there and finally get enough buyers and shorts to puke, the last phase, the push through, is going to be that breakout. And it's at 6,800. That level for the clean move upward. Then you're looking at 6,900. You got about a 100-point move upside if that could happen. Now, can it happen on? You could actually see it on this chart. This is the 6,800 here. Oh man, why can't I draw a straight line? There we go. This is 6,800, more or less straight. All right, that's the level. This is where we're at the moment. I think we have a little more upside. I think we're gonna go in and tackle some of these areas today, and maybe even get to the 6,800. Can we do it during a holiday shortened week? The answer is this is the easiest time to do it. All right, if somebody wants to see the market higher, let's say you're a fund and I'll give you the trading plan, and then we're done. Let's say you're a fund and you manage, a small portfolio of $50 billion. It's not small, it's big. Let's say $50 billion. And you look at the market this week and you say, it's month end, right? 28th of November is the, what is it called? It's Thanksgiving. Let me open the calendar just so I don't embarrass myself. All right, Monday, December 1st is the last day of the month. So you're kind of going into the end of the month. All right. Wait, Monday, December 1st is the next month. So this Friday is the last day of the month. Last trading day of the month, right? Because on Monday, it's December 1st. So it's the last trading day of the month. You have a $50 billion portfolio, okay? And you say to yourself, everyone's away eating turkey or preparing to eat turkey. I'm going to have to send a client statement this month, all right? If I spend $2 to $3 million of cash and I bid the crap out of this S&P 500 market, it's going to be easy to do, number one, because everybody's eating turkey, all right? And number two, everyone's gone while they're eating turkey. They're not looking at the market. Let me spend $2 to $3 million and quietly bid this crap up and close it strong. So when I could send a statement, my whole fund is up 3% or 2% or 1%. But 1% on $50 billion is more than $2 million, right? So this is the important part, all right, that I want to make a point to you is it's not today, but tomorrow and into Friday, I think we're going to see a bid. Today, we're up into resistance. Paul, that's the question right there, brother. That's the question for what's kind of keeping me. Had NVDA not crapped the bed this morning, it's clear, strong bull signs, right? The fact NVIDIA has kind of crapped the bed is I think now the market is going to start to feel top heavy. So this is the prognosis. I'm going to end it like this. Early morning weakness, I think, in the S&P 500, followed by early afternoon to late afternoon closing bell strength. All right. Remember, this is good news, though, because bull markets open weak and they close strong. All right. Bear markets open strong and close weak. So this weakness is to be, this weakness in the morning is to be bought into for the rally into the afternoon. For me, the level that I'm personally looking at that looks somewhat interesting and would be the basis of a decent pullback long is the 6,700 even. Now, we're not too far away from that price. Okay, we're very close to about 17 points. I like this as a pullback initially, and then 66, 84 to 88. These are the two levels. I'm going to start marking them because I want to keep day-to-day context. But this one and then, this one here are the levels that I really like. I'll extend them, etc. last time or for next time. But look, the yesterday's session, this is the one we looked at, 44 to 48. It just about touched it and rallied off the top. So now we delete this level because there's no point of embracing it for too long. The trade is already done, and now we extend this one. And these are the levels I'm looking to pick up. I don't want to fade rallies today. I really don't, because it's a bullish market. And yes, we're close to option call wall resistances. It's great, but we're not in them. And we have the big upside at 6,800. But rather than fade this crap up here, I would really love for it to pull back first, give me a nice shot to get long, and run it up into those areas or towards those areas at the very least. I will tell you this, and I'll leave it on this note. All right. Many times, these kind of levels are not going to work. So when you see somebody draw a level and it's, 50 points out, it's impossible for anybody, no matter how much they tell you they know the market, how long they've been doing it. I've been trading since 2001. I'm moving to 25 years now, a quarter of a century. I'm a dinosaur. And one thing I've figured out is no matter how much you want to believe you could get a level within a point, and 50 points away, say I want to get long to 84 quarter, it sounds great and logical for your human brain because now it has clarity in a market full of uncertainty. You're going to be wrong. You're never going to get it to the tick. The thing you want to work on is not predicting levels before they happen, but finding a pattern that works in real time. This is why I use order flow. People say, oh, well, order flow is like, what are you, a scalper? Yes, I'm a bit of a shorter term trader because I don't know. I can't predict 50 points out. Can you? Reliably? Like, let's be real here. Even Warren Buffett's a scalper because when you go to put your trade in, you're putting it in on a second basis, and your trade is stamped with nanoseconds. So we're all scalpers, And scalping is literally just getting a good entry. So what I'm trying to tell you here is these are the levels of intent that I like, but there are levels that happen in the trading day that aren't apparent before they happen. These are the levels that actually work the best. The levels that the market dictates in real time that you can't see before the market opens because they're based on order flow. They're based on the book. They're based on actual trades, not past trades. Any level you draw right now is based on a past trade. These patterns I look for happen in real time. These are the levels that matter to me. So those are the levels I'm looking at on the downside. But in the trading room, we have these patterns occur, and those are high probability setups, not the ones where we kind of hit the level 50 points below. It's ridiculous to think that you're going to catch it like that. All right. Gabriel says 1% of 50 billion is $500 million, by the way. See, Gabriel, thank you for the math. I was trying to do it in my head, but honestly, bro, I'm lacking sleep a little bit and had a weird morning, pardon me. But thank you for doing the math. 1% of 50 is $500 million. So imagine spending $2 million to bid up your portfolio, $500 million. Investors are going to think you're great, despite the fact that you might lose it all the following day. It doesn't matter because when they check their statement for the month, you get to show them that you're up, and that's what matters. Window dressing is the term for that. I love you guys. I got to get in the room. Hopefully you found this update useful. I'm looking to buy weakness this morning, and that's the plan for the trading session. Where I'm going to do it is a function of the order flow and the real-time revelation of the market. My pattern is called reveal and reload. So I'm going to look for the reveal this morning to see where the flow shows up. All right, the real-time levels that matter, not the ones that I'm thinking are going to matter based on past trades. We're looking at real trades. Love you guys. If you guys want to join JRAD, thank you, sir. I appreciate that comment. As I aim to deliver value every day. So thank you. If you guys want to join, 30% off right now. Check out what we do at the trading room. It is live until Black Friday. You get 30% off any one product or any bundle you create. Take 30% off of everything. This is one time a year we get aggressive with our pricing. I don't like the discount price, but we do it once a year with just, with the intention to grow the community and to get the word out. I love you so much, guys. I honestly do. I love doing this every single morning and trading with you. I got to head on over to trading room. I'll see you inside there. Jackie, I appreciate you. I hope you have an amazing day as well. Gabriel, thank you. Paul, Marco, King Kong, Paulie, y'all are the best. You guys have yourself a great day. All right? Positive vibes all around. Goodbye.